to see the whole thing. We're going to be kind of doing a recap on Rivian because this is a stock that we have officially closed out of. We are no longer holding Rivian shares, but I want to talk about what could maybe influence us to get back into this, and if so, how much money we can expect to make if we get back into this. We're also going to be going over a couple options trades we had. Those are actually both going to be on AMD. We had two very nice ones recently to cover, and they're different enough that I can kind of show you guys two different like very key trades we look for with stocks. So just because it's the same stock doesn't mean the trades are the same. We're taking the same strategy. It's two actually very different techniques that we're going to be going over. Lastly, and I did say this is going to be a pretty jam-packed class, which is great. Lastly, we're going to be going over three different stocks that I'm looking to invest in, and I'm going to show you guys exactly why I want to invest in them, at what prices I'd like to buy them, at what prices I'd like to start trimming, so taking profit on our position. And of course, we're not just for the investments looking at the chart, we're also looking at key things within the stock, so their EPS, and news, of course. News is huge when it comes to these investment trades. So I want to show you guys why I believe they will work out very well, just like Rivian did. So for anyone who doesn't know already, I typically will be investing in undervalued stocks. For example, let me show you how Rivian looks like on the 1 year. It's now up on the 1 year just because of this recent move, but before this, as you can see from back here, it was just about break even, if not down. But of course, if we go to the 5 year, it's killed, right? Because Rivian IPO'd and it was super overvalued at the IPO at $100, and then that's when EV stocks were getting absolutely hammered. Tesla was down a ton, so of course Rivian didn't actually have a chance to be solidified as a stock. So why on earth did it have this massive move that we were able to buy shares at $10 about? I think our average was 10.80 if I remember correctly, and sell them at 18.5. So for the past 2 months, I think by now, it's been, yeah, probably 2 months, I've been talking about this 18.5 final take profit. And of course, that is because that is where we saw a massive sell-off here, but of course excuse me, push up, rejections, tons of stuff, right? So there's a lot going on at this 18.5 level that really intrigued me, and I thought, it's probably safe to be out of this before that, and that turned out to be almost perfect. We could have made, what, like 50 more cents per share if we held, but it actually turned out to be like an almost perfect sale, considering how quickly, because it dipped the next day, the move ended up being back to the downside. Which means the cool thing about this is that if Rivian keeps falling back into our zone, I'm ready to load up on shares again. I'm 100% ready to get back to our 200 share position on Rivian if we can get them at around, I don't know, like $10.8 again, maybe even a better price. I will absolutely start buying now. While it is down, I've already bought some shares. The only reason I haven't alerted it is just because it's so few that it doesn't really make sense to. So once it falls back into this zone, I'd like to alert a full-scale position on Rivian. And that's because of a couple things. Number one, super undervalued just in a, like, based off of the sales they're expecting. They've already got over 80,000. I'm not sure of a better term to say this, to describe it, but like sign-ups for their cars to be bought in 2026, because that's when their next massive batch is coming out. So their next models already have over 80,000 sign-ups, I guess is the right word for that, which means it's like a contract. So they've already received down payments on those sales, which is pretty cool. They've also got another 80,000 vans to deliver to Amazon. I've already seen one on public roads. I was driving around in Miami, saw one already in use, so that's really exciting. And I'm not sure if anyone saw, I think I did a post in my alert channel about this, but it got leaked on Reddit that they're actually partnering with DHL as well, because the same exact style of van was spotted with, and multiple were spotted with DHL wraps, and those were being transported somewhere, so they're not in service yet as far as I know. I think that was leaked back in March, maybe early May, but that is another good sign that they could be delivering another 80,000 vans to DHL. So a lot of 80,000s going on here, which is great. Another reason, of course, the big reason, because the only reason this stock is down is because people are concerned about Rivian burning through all their cash. And the number was by 2026, they would officially burn through all of their cash and have nothing left to go and release that big batch of vehicles. The reason the stock just jumped like crazy and why we made 65% in just 10 minutes on Rivian shares is because it was announced that Volkswagen was actually doing a massive deal with them, so they officially closed on a massive deal. I believe it was a $5 billion loan, which essentially saves the company. Like now Rivian is pretty much solidified in the EV space. It's not going to be something like Tesla, where you see those all the time, everywhere. I see more Teslas than Toyotas now. And it's not going to be like that because they don't offer like very competitive pricing. Instead, they offer cars for like $100,000 or $80,000 after options because they're more like luxury vehicles. So it's more of a high-end EV company. But they're officially solidified in the space with that massive, massive loan because now there's no chance that they're gonna burn through all that. They couldn't even if they tried, pretty much, right? So they're saved till 2026, which is when their next batch comes out, and they'll receive a ton more money. Because yes, they've already received those down payments on the contracts, but that's when they're receiving the actual payments for the cars. So super exciting news for Rivian. I think this. Let's go like on a larger time frame. I would be very surprised if, now that we have this information on Rivian, if it was at around this area here, so anywhere from like $31 to $41 within the next couple of years. Now, analysts are still saying the price target for a year from now is 18.5, and I forgot to mention that's another reason why we wanted to sell around 18.5. So analysts do expect it to hit 18.5 by, I think it's 12 months from now was the given date. So that's great, it's already considerably undervalued. That's another reason why we were loading up at $10. The one thing I regret was not just buying like crazy down here at $8.5, because I was making YouTube videos saying, hey guys, Rivian's at $8.5. It's either gonna go up or down like crazy with earnings, all that kind of content, but I wasn't actively buying because if you see in my alerts channel, I was really focused on buying in this zone that I wasn't thinking about buying if it went below. So that's my only regret with Rivian. I do think if it comes back to this zone, that it is one of the most undervalued companies in the whole S&P 500. I do think that it is, sorry, not the S&P 500, but in the whole stock market. I do think even now it is extremely undervalued at only $13, but that's where it really makes sense to load up like crazy. Also, we've got what's called inverse head and shoulders, which I don't really pay attention to. I don't really trade patterns like that. I never have, but a lot of people are liking that as well because I think, if I remember correctly, as soon as it passes kind of like the line here, where we see the shoulder formation, that like if it closes above that, it's supposed to be very bullish. Again, I don't really follow patterns, so that's not really something I advise really looking at, but we can see like a similar formation here, where as soon as it passed this line, it closed above, we saw a massive move. So, take that with a grain of salt, I guess. Another thing we wanted to talk about, of course, was the AMD trades, right? We had two very significant AMD options trades recently. So one of them, we can actually see them probably, yeah, there's one of them right here, the other's probably right here around. We've been bullish on AMD for the past couple of weeks, especially at this zone, right? We were looking at AMD calls a lot. I think we had 3 AMD call trades that all hit, all 3 take profits just this month alone. So very good there. And then we're also going to be looking at a short position we took that hit 172% in only an hour. So one of them wasn't that crazy, the other one was that big one. So we'll do that one second. Let's go to the 1 minute time frame because even though I do my charting on the 4 hour and the 15 minute, I'm always actually taking the trades on the 1 minute just to stay uh, like pretty much just because I like seeing exactly what it's doing as soon as it happens. So bear with me, this was a little while back. This is not one we're going to be going over because even though it's the same strategy we used in the second one we're going to talk about, it was more of a lotto trade where we weren't certain about it, right? So even though we did make 86% in only 3 minutes, it was like a market open trade where we didn't have a whole lot of reason to take it, so we're not going to be going over that one today. We could in a future class or video, so don't mind doing that, but let's go find this one. It's right here. Perfect. So I think the most significant part about this trade was that I did take it live, and before I even entered, I walked everyone through the take profits, and you can hopefully see that in the channel if you've got premium. You can see that I walked everyone through the trade live before entering in a single contract, which is great. That's kind of like the best possible thing, because sometimes people complain that, oh, your trades move too fast, which I understand. It's on the 1 minute, so of course it's going to be moving. So some people complain that it just moves too fast from the alert, which does happen occasionally. In this case, and the other one we're going to look at, actually, because we've been super consistent with this kind of thing, we alerted all the take profits beforehand, so you had plenty of time to get filled and know what the whole plan for this trade was before it actually happened. So, in this trade, what we were looking at was a reversal. So like my normal options trading strategy for intraday trades, I look for a move down, I look for a consolidation zone, and then I look for a very nice close above the zone. Now in this case, you'll notice if we zoom in, it didn't close right above the zone, like literally right above the zone, which I really like. That gives me a lot of confidence in the trade because it's right at support. Instead, it closed slightly above, but then it dipped back into the zone, which is another, I'm not going to say a buying alert because I don't follow indicators, but it's another, for lack of a better term, indication that I would like to be getting into this trade because it's going back and touching that support, right? So we went long. We got filled with 10 contracts here. We took a little bit of profit once it shot up pretty quickly within 3 minutes, right? So it is a quickly moving trade, which is what I like, to be completely honest. Um, After our first take profit, as you guys know, I like to set my stop loss to break even. So even though I didn't actually put it on this chart to not confuse anyone as to like why the heck is this red part so small, because that would be super unrealistic, right? So I always leave it like that, but we set our limit orders, it's called a stop limit order if you use Robinhood, or a stop loss on Webull. So we set those to break even. That way, if it falls all the way back down, we don't actually lose money on the trade, which I do with almost every single one of my trades, including the swing trades. Because even though those I'm going for like maybe days at a time, I still don't want to lose money on the trade once I'm already up, right? It doesn't really make sense. And that's why I've kept such a nice win rate as well. So then we took take profit 2 right here. That's because we saw these rejections. And the reason I didn't put my take profit 2 right at these rejections is because what if it was to hit that and then fall right back down immediately, right? I wanted to be out of some contracts before those rejections happened, just to be safe. And we almost saw that. Luckily, we had a very big candle that engulfed that completely and kept on with the move. Now, at one point, it did look like all these wicks were going to keep us in the trade for a very long time. Luckily, we stuck to our original trading plan and only sold once it hit TP3. Now, why did I not set this any higher? Why not like right here because of these rejections? Well, we see a lot more consolidation here, a lot more like up and down like crazy than we did here, right, with only 1, 2 rejections. So this is more like 5 or 6, this is 2, meaning we'd like to take contracts there. If we had left it all the way over there, all the way up there I should say, as you guys can see, it would have rejected before then and fallen back here, and even though it went higher in the future, it would have stopped us out at break even. So Good thing we did that. I'd say this was a very, very successful trade. Now with that being said, I just wanted to do a brief walk through that trade. Let's talk about my one that happened. I can't remember if it was the same weekend, just a couple days before, but it's right around here. So, oh no, we might have to do the 5 minute because I need to renew my premium with TradingView. So let's go find that. There we go. So yeah, we'll just do it on the 5 minute. That's totally fine because this was such a large trade. If it was the 1 minute or like that previous one, that was we took probably for 33%, I think it was. If it would have been that, like that trade, then we couldn't really do it on the 5 minute because of the scale of it. But in this case, we took 172% on contracts, which as you can see is a big enough move to be very visible on the 5 minute. So, like that other one, we walked through the entire trade before even placing a single order. Now the cool part about this is you'll see that we got in literally as the market opened. As soon as I possibly could, I filled those orders, those puts, right? So we were looking to take profit at different key levels, which you guys can see very clearly here. And of course it will extend out as well. But why did we enter a market open? Isn't that like very, very risky? Well, we are in the 5 minute, keep in mind. So this was a very big gap up. And if you've seen my AMD alerts for the last probably 2 years I've been using this strategy, almost every single time, without fail. This is such an interesting concept, I'll probably do a whole video on this. Almost every time, without fail, AMD will gap up to like 3% in the morning. When it does, sorry, not every morning, but when it gaps up to 2 to 3% in the morning, it'll reverse very quickly at open. So you can see that reflected in the chart many other times. Pretty much every time it goes up 3%. So this isn't something you can take every day because it doesn't gap up 3% every day. But when it does, similar to what we were doing last year with SPY, pretty much every time on CPI that it would gap up 2%, because SPY is just so much more of a bigger deal, being up 2% than 3% on AMD. We would take puts at open on SPY, and every single time it worked out. So we started doing the same thing just about with AMD, even earlier than that, and that was when it would go up 3% in the morning. So as you guys can see, not only did it go all the way down to the base within an hour, but it kept dropping. So if I held, I probably could have made around, I don't know, like 250, maybe 300%. But you guys know, I only like taking profit where it makes sense. I don't want to keep holding for a while in case it reverses, right? Because you could have been like going short here, you had your final take profit here, and it just reverses entirely all the way back up. Also, this is already a 3% move to the downside, right? Because it gapped up 3% at open. So a 3% move on AMD already, you wouldn't expect it to go further down, but it did, and so that like you could have made more, but I was very happy with 172% gain. That was very good. Now we're done with our options trades, so if you guys have any questions, feel free to add those. You can do that in the general chat or in DMs. I'll try and check those as soon as possible, but we'll go ahead and move on to the next section, and I will keep an eye out, of course, for pings or DMs so I can respond as soon as possible. But let's talk about 3 stocks I'm looking to buy with the earnings from Rivian. So, very first one is going to be PayPal. We're also going to be looking at American Airlines and one more which I haven't really talked about. I'm not sure I've talked about it since April, maybe late April, and you guys will see why when I show you the chart because we already took a very nice trade on that. So the first one's going to be PayPal. Why do we think PayPal is undervalued? Why do we think we should buy now specifically out of all times to buy it in the past? Well, similar to Rivian, we're looking at a zone where we saw a whole lot of rejections, a whole lot of very big moves. I could even go and extend this zone back here, right? And you guys can see every single time without fail that it's gone down and hit the zone, it has popped like crazy, right? All the way up to at one point from this zone at $58 all the way to $70. But if we zoom out to the 5-year chart, this is where it gets exciting. Back in 2021, PayPal was worth $300. So there's plenty of room to the upside, but why is it down? Like, why won't it just keep falling? Well, there are a couple of reasons, because we did see it go by the zone at one point before being bought up like crazy. So why do we think that it's going to go up now of all times? Well, it's not because of an expected EPS that looks very bullish. As a matter of fact, it does not look bullish. It looks bearish. Because even though EPS has been in an uptrend for a whole year, maybe more, I think more by now, we also have this slight dip in EPS for their next earnings, which could be helpful, right? That could cause PayPal to go even further down into our zone. We get a better fill on shares, right? A better average, because I would like to buy if it falls down even more. But why do we think now is a good time to start getting these shares? Well, for a couple of reasons. Number one, they released a new company called Brainstem. This is going to bring sales in through PayPal, which is the mother company. Another large reason, I mean, that's a huge reason in and of itself, just because of how much revenue they are expecting from that company to go into the mother company, which could potentially save PayPal stock completely as a whole. But actually two more very important reasons that we can't look over are: number one, the fair value analysts give PayPal is $104, which is about 2 times what it's worth now. So right now, financial analysts are saying, and this is, you can Google this, just search fair value of the stock. I like to use Robinhood because I have the Robinhood Gold feature that tells me all the important details like that. So I can see that PayPal has $104 fair value. So basically they're saying it's worth a little over $100 without any like earnings, without any additional information. Right now it's worth $100. And so I like that a lot. I like seeing that there's plenty of room to the upside, about 90%, which means I think we should be buying now while we've been in a downtrend. Now, another reason is that the price target for PayPal is also over the current price. And what do I mean by price target? Not just what people think it should go to, but the given price target from analysts is about $129 for the next 12 months, which is even better than the fair value. So I definitely want to be buying now. Sorry, that's not the 12 months, that is the 3-year, I believe. So within 3 years, which does make it not as exciting, right? But that's still 100%, even more than 100% actually, in 3 years. And for those of you who didn't know, the average gain from SPY is about 10% per year. So it's much better, right? That's like 33 point something, but even more considering it's over $100 in that case. So PayPal looks great. It's not my number one buy though. What is my number one buy? It's not JD, that's going to be the third one. Our number one buy right now after Rivian, so this is where the most money in my portfolio is currently, and it's spread throughout I think I have like 5 actual investment accounts, one main one of course, which is the one I show most of my profits on. So the largest position is American Airlines by far, and Ford is coming up close behind it, but Ford isn't super undervalued right now compared to American Airlines and the other stock we're going to look at, JD.com. So why is American Airlines such a good buy right now? Well, as you can see, like these other two stocks we've looked at, it's in this buying zone. It is exactly where we want to buy it of all places. But why, like we talked about with the other ones, why will it not fall down a whole lot more? What's stopping it from continuing this downtrend? Well, in only 18 days, which is going to be July 17th for after hours, I believe. Maybe July 18th pre-market, we'll have to see. And of course, I'll alert any trades I take in my channel. But you guys can see they're going from a terrible EPS here at, I think it was negative 0.5 on EPS, It is getting close to negative 0.7, so around there, to over 1.00 EPS. So going from unprofitable in the quarter to extremely profitable in the quarter. And we've got back up here, we can see that last year during this time, we were in the same area, which it looks very, very good in that case, because, it's not just like a possible prediction, it's what has happened historically. Also, analysts give this a $16 price target, which is absolutely amazing. So if we can get like an average of $10 on American Airlines, if it keeps falling, we could make a little bit over 60%. But the fair value, so what it's the fair value right now, so what it's worth right now at this moment, without any news, without anything like that, is $13.10, which is already significantly higher than where it is now. Let's all the way up back to right around here, right? So that is already a massive move up. You could be making, like if we get our average closer down to $10, up to like 30%, maybe a little bit more, because it is a 13.10 expected fair value. So American Airlines looks amazing. EPS has been on a rise considerably since COVID, and let's expand this chart a little bit more. So as you guys can see, we are at exactly about COVID. I said exactly and about. We're at COVID prices, right? So this is where we want to be buying. Last time we were at this price here, like literally the last time we hit like $11, I think exactly, was during COVID, and that's when it rocketed here to 22, almost 23. It hit 28, almost 26. 20, all these great numbers that are like 100% higher than where it is currently. So if American Airlines does pop all the way up here to our profit target of $14.90 or around 15 bucks, I'm actually not going to sell my shares, because if it can do that quickly, I definitely believe it'll keep going. So I'll send this out maybe to like $25 potentially. We'll see how quickly, the whole move happens. So it kind of depends on the timing there. But that's what we're looking for with my number one buying position. Next up is going to be JD.com. Why are we buying JD? Oh, I gotta update this because we did buy a few more shares, so I'll have to see what my actual average is, but of course it's going to be somewhere from right here to right here, because it hasn't gone lower than that, right? So in April, like I said earlier, in April we were buying JD up like crazy because of all the articles coming out talking about how it was the number one most undervalued stock in the entire S&P 500. So after that, literally like a couple weeks after we started buying, we got an average down here in this zone, and it went all the way from $25 to $31.50 about. It went higher, but that's where I took my last and final take profit. So that's where I was out of shares there. And now that it came down pretty quickly because of what's going on in Taiwan, the whole China and Taiwan situation is weighing down a lot of stocks like Alibaba, which is very similar to JD.com, except JD is not so much bulk buying. And a very significant reason why I'd like to be buying now is not only is it in this zone where historically we'd like to be in, but they just earlier this month, only 12 days ago, so June 18th, broke the record for transactions in one day because they were doing some sort of week of sales, and that just like killed it. It went absolutely amazing for them. They reached over 600 million members, and I think last year they were at 500 million, so that's like a crazy increase. That's huge for the stock, yet it's still trading at these crazy low valuations. Let's go to the 5-year and you'll see how significant this is, right? So just like everything else we've looked at, it was doing really well in 2021 when tech stocks were super overvalued, right? So it made sense that it would come down. But right now it's at a point that it's just so incredibly undervalued, it only makes sense to buy now. And so I'm really looking forward to this one. I think this one, I don't have price targets for you guys because there aren't enough analysts currently covering it. Now, you could probably find some stuff on Google, but I don't know how accurate that would be. But I think that's what makes it, so significant that it's really kind of looked over. It's overlooked right now, um, and so I think we should be buying it while it's at these very, very cheap prices compared to what it should be.